According to the United Nations World Food Programme and its partners, nearly 55 million people in West and Central Africa will struggle to feed themselves in June to August 2024 rainy season right here in Nigeria. Well, the forecast may be similar. The most recent food inflation statistics reveals that average food prices have risen by 40.53% relative to what it was in the month of April last year. Tonight, Babajide Ogunsanwo, founder of Leadership by Data and Channels Television's data analyst, is here to share more insights about this. Hello, Babajide. It's good to have you on the news at 10.
Good evening.
How would you interpret the latest inflation figures? I mean, the statistics. How bright is the light at the end of the tunnel, if there is light at the end of the tunnel, actually?
I think for most Nigerians, light or no light, they just want to get out of the tunnel. But with respect to and with reference to inflation, there are different ways to look at it. Summary tonight was that we'll be talking about the good news on inflation based on these statistics, and clearly there's some bad news. But before we take a look into the good and the bad news, and today as well, it's now just 2 decades shy of 3 centuries. I'm talking about that year, 1742. On this day in 1742, the Celsius thermometer was invented by the great inventor Jean-Pierre Christin. Now, you might clearly ask, what does this have to do with inflation? For one moment, just imagine if we could measure the temperature of the bank account of the common man. What do you think it will read?
Very hot.
And that's exactly what these inflation numbers show, especially food inflation. The bad news is food inflation right now, based on the report we've seen, compared to what it was this time last year, on an average, 41%. For a lot of Nigerians, especially for the common man, depending on what you are buying, some items have significantly gone above 41% compared to last year. Bad news. However, there's some good news. Based on this same report, they show that the NBS, based on the surveys, show that food inflation in the month of April compared to March was 2.5%. And that's the best, in simple terms, that's the slowest rate at which food inflation has gone this year. But the question on the lips of most Nigerians is, what is causing inflation? And I'd like us to take a look at the data, because the data allows us to clearly understand the causes and how we can even fight the cause of the causes. And if we take a look at that important number released by the National Bureau of Statistics, comparing food inflation in April to March, they say food inflation within that month, March to April this year, grew by a little over 2%. However, that growth was primarily because of food and non-alcoholic beverages contributing to 52% of that number, and clearly housing, water, electricity, and clearly fuel contributing to another 17%. So in summary terms, the challenge we have that is leading to this inflation is right in front of us. Food, non-alcoholic beverages, and the essentials: house rents, water, electricity, and gas, and cost of buying petrol. So clearly, if we can manage those causes and indeed manage what is causing these causes, so it's food, but what then is causing food? We're looking at imported items, we're looking at low production, we're looking at the challenges faced by farmers, we're looking at the means of small-scale production, which should have upscaled into commercial agricultural production. So we need to not only look at the causes that are in front of us, we need to look at what I call the causes of these costs.
But how much is inflation affecting the ease of doing business in Nigeria?
Inflation is playing a big part, and that's because one of the ways the central bank is trying to manage inflation is to regulate the lending rate, the cost of borrowing, which is also making it even harder for businesses to produce and to even compete. Let's take a look at what has been the monetary policy rate from the central bank within the last decade, because it allows us to clearly understand the problems and we then can discuss the solutions. This time, a decade ago, 2014, the monetary policy rate set by the central bank was 12%, and even then, businesses were complaining that the policy rate, a benchmark lending rate, a proxy for the lending rate of 12%, was extremely harsh for businesses. That was in 2014. Fast forward to the situation we are in today. We are not at 12%, we are not even at double what it was in 2014. We are at 24.75%. As at May 2014, no business could have imagined that a decade onwards we'll be in a situation whereby we'll have a monetary policy rate at 24.75%. So the challenge today is, when will we even get back to the rate of 2014? Is it going to take us another decade to get back to that 2014 rate that several businesses felt was not good enough? That is the problem. Now, Anne, let's talk about the solution, especially even the solution as recommended by the United Nations, the World Food Program, about how Nigerians and other countries can fight it. And that statement is coming from the United Nations, talking about economic challenges such as currency devaluations, soaring inflation, stagnating production, and clearly trade barriers have worsened the food crisis affecting ordinary people across the region, with Nigeria, Ghana, Sierra Leone, and Mali being among the worst affected. So clearly we need to keep an eye on our currency, stagnating production, and trade barriers. We clearly need to be able to remove these bottlenecks to be able to also reduce the rising prices of food. But beyond that, there are a lot of other things that we also need to understand with respect to food inflation, and that is that majority of Nigerians spend their money on food. And
so we've talked about business and how it's affecting it. Is there any connection with food inflation and insecurity, especially in the northern region? Are there facts?
So most times, there are no clear facts, but what we understand is clearly insecurity has been used as the boogeyman. The truth is, the inflation rate is a proxy for hunger rate. The hunger rate is a proxy for frustration rate, and frustration rate is a proxy for crime rate. Let's take a look at some of the statements, not just coming from the United Nations. Let's look at the statement coming from the Defense Headquarters, which reference to Nigeria's food inflation. And clearly, that statement and the point has been strongly made, which is, bullets will kill terrorists, but there's no bullets that can kill hunger. And so let's not stop. One of the ways to fight inflation is to make sure that food is affordable for the people. In the final analysis, and we need to take a look at the chart of the week, because that talks about hunger, the politics, and the economy. We're going into 1 year of President Tinubu's management of the economy, but what Nigerians are asking is, what was the situation 1 year before President Tinubu came in? And those numbers are in front of us, looking at food inflation. Food inflation, average food inflation under President Buhari in his last 1 year in office, the National Bureau of Statistics tells us 20%. The numbers shows that food inflation under President Asiwaju in his first 1 year of office, 27%. So, and the question is, will you rather live in Buhari's last 1 year or Asiwaju's first 1 year? And in the days, we'll come and find out.
Days will tell. All right, thank you very much, Babajide Ogunsanwo, founder of Leadership by Data and Channels Television's data analyst, for your interesting insight into
More of this analysis coming on May 29.
All right, we'll be waiting.